Hello and welcome back to the Olymp Trade channel. The place to be if you want to up your trading game. I'm Alex and today's video is all about patterns. So whether you're a day trader seeking to make quick gains or someone seeking to understand the deeper nuances of the market, this video has something for you. We are going to explore how candlesticks patterns can serve as your powerful trading compass. So if you are ready, let's get started. First, the basics. Price action trading. I'm sure you've heard about this style of trading countless number of times and wondered what it's all about and how you can use it to improve your trading outcomes. Well, price action is basically the art of making trading decisions based on the actual price movement on the chart rather than relying heavily on external indicators. This means no lagging indicators or moving averages to help you determine the dynamic support, resistance areas, and trends. This style of trading relies heavily on candlesticks to understand the battle between buyers and sellers and to predict the future market movements. The Japanese candlesticks represent four critical pieces of information: the opening price, the closing price, the highest price, and the lowest price over any given period. A green candlestick with a long body would indicate a strong buying pressure, while a red candlestick with a similar body would suggest that sellers are in control. Most traders, including myself, consider candlesticks patterns to be the market's language, offering insight into the market's heartbeat. So it's not just about numbers, it's about the story they are trying to tell about the market sentiment. It's the details that matter. The shadows or wicks reveal price rejections that might be crucial for understanding potential reversals and when they might occur. So recognizing patterns is your first step. A bullish pattern signals a potential uptrend, while bearish pattern hints at a downtrend. But in the realm of 5-minute trading, timing and precision are everything. So let's focus on few patterns crucial for short-term trading: the hammer, the hanging man, the engulfing, and the doji. When identified correctly, these formations can signal reversal, continuation, and market indecisions, providing actionable insights for a quick trade. The hammer pattern usually appears at the end of a downtrend, showing the main trend's tightness and signaling a potential reversal upward. After a downtrend, the hammer's small body and long lower wick indicate that sellers drove prices down, but buyers pushed back, closing near the open, which may be a cue for potential upward momentum. Remember, the longer the shadow, the stronger the signal. The opposite is true for the hanging man, because at the peak of an uptrend, it warns of a possible downtrend. Next, the engulfing. This pattern occurs when two contrasting candles appear. This can be bullish or bearish, but in both cases, it signifies a strong reversal. A second candlestick engulfs the body of the previous one, suggesting a shift in control and momentum. The signal is usually stronger if one body is small and the second is big, or when one candle engulfs many candlesticks. And now, the doji, the epitome of market indecision. This pattern shows almost equal and close prices, suggesting a tug of war between buyers and sellers and often signaling a reversal or a significant pause in the trend momentum. Remember, the most successful traders don't merely react, they anticipate. So by mastering the language of the candlesticks and using technical analysis, you are not just following the market, you are staying 2 steps ahead. Incorporating these patterns into your 5-minute trading strategy requires practice and precision. So start by setting a precise base rule based on each framework for each pattern. For instance, enter a trade only when a pattern forms at a significant level of support or resistance for a more reliable signal. Remember, even with the most reliable patterns, only some trades will end favorably. So managing risks effectively is crucial. What patterns have you found to be most reliable in your trades? I'd love to hear your thoughts in the comment section. Remember, trading is much about community learning as it's about individual strategy. Thanks for tuning in, and don't forget to check out my previous video with Gaspar about the 3 trading modes on our platform. Keep an eye on those candles and happy trading. Bye bye.